The risk of recession, the Fed rate hike, the global economy, all of these factors are, of course, driving markets up and down. What, though, could these long-term effects be for crypto? Joining us now to talk about that more is Annabelle Huang, managing partner of Amber Group. Annabelle, great to have you with us as always. Let's talk about US GDP versus the Fed. Presumably, in your opinion, is the Fed that is more important as far as crypto investors are concerned out of those two things. But how much really does GDP factor into the equation, do you think, for crypto markets?
I think it definitely gave the crypto market a boost, which is ironic because GDP didn't print that well. But I think the narrative is now if the economy is not doing well, then the Fed might consider tapering a bit earlier and might start cutting rates a bit earlier, which will give sort of the easy money era again and pave the way for another crypto boost. But it's important to note that GDP is not the Fed's mandate, so I think it is an important stat to look at, but doesn't necessarily equate to any monetary policy sort of changes.
Yeah, it's sort of a weird situation, isn't it, where bad news is good news and like everything sort of seems upside down in a lot of ways. I mean, rightly you point out, that this is just the sort of thing that keeps expectations broadly where they are currently. How, though, do you make sense of this now as an investor? What are you looking at?
Globally, in terms of what's happening in Japan and Europe, or also in the sort of broader geopolitical conflict that's still ongoing. I would say all of these factors ultimately affect global economy or global monetary policy, which in turn also affect Bitcoin, Ethereum, the majors, as well as the broader crypto market. But I think in terms of crypto, particularly, if we hold a slightly longer term view, then if we zoom out and say that, okay, maybe the next crypto cycle is going to come in 2024, if not before, then what can we start doing now? What are some of the more fundamental things we can focus on? Is it the secondary market, or is it maybe some of the private market or venture side opportunities? And as investors, it's perhaps not a bad idea to still sit in cash, wait until there's clear sort of movement before you jump back in.
Yeah, look, you mentioned crypto cycles there. I think everyone's waiting for this decoupling, this decorrelation of crypto and traditional assets. What sort of signals are we going to be looking at for that, do you think?
We're in an interesting spot where the macro dollar funding cycle coincides with the crypto cycle. Because crypto cycles tend to be a lot shorter, then I think we are likely going to see a decoupling, hopefully to the upside of crypto versus the broader market. And the timing, again, is really difficult to say, but I think it will be a combination of a lot of the crypto-specific catalysts. So merge or whatever happens after the merge, and then also the Bitcoin halving, which is the good old classic catalyst, but that hasn't failed us yet. So I think we're all paying attention to these. And I think a lot of the other developments in the works, then we'll see if the next cycle we can actually get a bit closer to mass adoption or Web3.
Yeah, as you said, bear market rally certainly seems to be the basic characterization of what's happening. You sound a little bit optimistic, I think it's fair to say. I wonder whether that's a decent characterization of how a lot of people are feeling after last week and the data.
I think I'm more sort of longer term optimistic, and I think a lot of people are. Short term, hard to say. I think that view is shared by a lot of the clients and investors in general. But I think for those of us who've seen similar market movement and sentiment, then I think it's probably slightly easier for us to believe in the upside later.
All right, thanks a lot for that, Annabelle Huang, managing partner of Amber Group.